So um, imagine trying to plug a supercomputer into a wall outlet, right?
Hmm.
And the electric company just looks at you and says, the power won't actually flow for about 5 years.
Yeah, just check back in half a decade.
Exactly. I mean, that
Yeah.
is the exact literal physical reality that forced the largest, the most expensive corporate consolidation in human history. Usually, when we look at these major tech mergers and these deep dives, you expect a few $1 billion to change hands, and then the market just sort of moves on.
Right, maybe 10 or 20 billion if it's a massive deal.
Yeah, but on February 2, 2026, the global financial system woke up to a transaction that was so unbelievably massive, it honestly stopped looking like corporate finance and started looking more like, I don't know, the GDP of an entire country. We're talking about a $1.25 trillion mega merger.
It's hard to even wrap your head around a number like that.
It really is. It's a merger between SpaceX, valued at $1 trillion, and XAI, coming in at $250 billion.
Right, and to really grasp the gravity of those numbers, we kind of have to look back at the historical record. I mean, for a quarter of a century, the absolute high watermark for corporate consolidation was the Vodafone Management merger.
That was back in the year 2000, right?
Exactly, the year 2000. And that one sat at $203 billion. So this SpaceX XAI deal doesn't just, beat that record. It completely shatters it by an entire $1 trillion.
Wow. By $1 trillion.
Yeah, the new combined entity holds a financial footprint that is roughly equivalent to the entire economic output of nations like Australia or the Netherlands. It's just a scale of market power we simply haven't seen in the modern era.
Okay, let's unpack this because this isn't just a regular tech merger. It is fundamentally the privatization of the next era of human infrastructure.
Yeah.
We are basically watching software graduate from your phone and move directly into the stratosphere.
Literally into the stratosphere.
Yeah, literally. But to understand the sheer audacity of this vision, we have brought a massive mountain of sources today. I mean, we've got financial dossiers, strategic white papers, environmental impact studies, legal filings.
It's a heavy stack of reading this time around.
It really is.
Yeah.
And our mission today is to take you behind the curtain to understand not just the mechanics of this mind-boggling transaction, but why it fundamentally rewires global technology and capital markets as a whole.
Right.
And to do that, well, we have to look under the hood of that $1.25 trillion price tag. Because looking at the dossiers, there's a very harsh financial reality driving this timeline, isn't there?
Oh, absolutely. The underlying mechanics reveal a company that was in desperate need of a lifeline. When you parse the financial data in our stack, the main catalyst for the merger becomes incredibly clear. XAI was, well, they were functioning as a cash incinerator.
Just burning money.
Exactly. They were burning through approximately $1 billion a month. I mean, in just the first 9 months of 2025, they consumed $9.5 billion in capital.
It is just wild.
To put a finer point on it, if you look at the third quarter of 2025, XAI brought in $107 million in revenue, but they posted a staggering net loss of $1.46 billion.
Wait, just doing the rough math there in my head, that means they were spending, what, like $14 for every single dollar they actually earned?
Yeah, exactly, 14 to 1.
I mean, even by Silicon Valley hyper-growth standards, that is a terrifying burn rate to sustain.
Right, because the infrastructure costs for frontier artificial intelligence are just astronomical. XAI needed $34 billion in fresh funding by January 2026, literally just to keep the lights on and the servers humming.
And they couldn't just raise that from venture capital.
No, they simply couldn't raise it fast enough on their own. So SpaceX, sitting on that historic $1 trillion valuation we talked about, offered an unparalleled equity cushion. They essentially absorbed those AI infrastructure costs using a highly specific legal mechanism. It's called a reverse triangular merger.
Okay, that sounds like some intense Wall Street jargon right there. Walk us through how that actually functions in practice. Like, what is a reverse triangular merger?
So instead of mixing the two companies together, like, pouring two colors of paint in a single bucket, SpaceX created a waterproof box. They set up a special purpose vehicle in Nevada.
Okay, so a separate container entirely.
Exactly. And XAI was dropped into that specific box, becoming a wholly owned subsidiary of SpaceX rather than merging directly into the parent company itself. This accomplishes two really vital things for them.
Which are?
First, it's structured as a tax-free reorganization, which defers a massive tax bill for the shareholders. And second, and crucially, it legally insulates SpaceX's core aerospace business.
Ah, so protecting the rockets from the AI debt.
Precisely. You really do not want the multi-billion-dollar government contracts you hold with NASA and the Department of Defense getting tangled up with XAI's massive debt obligations or their regulatory risks.
Right, and doing it in Nevada isn't exactly a coincidence either, right? Because looking at the legal filings, Nevada corporate law is famously Yeah, like if an investor wants to sue over a bad deal, they have to prove the executives engaged in intentional misconduct, not just that the terms were unfair to shareholders. It effectively builds a legal fortress around the entire deal.
That's a great way to put it.
But hold on, I am looking at the timeline of the announcement, and I really need to ask about this valuation jump. Because on the day they announced this, SpaceX's valuation jumped from $800 billion to $1 trillion, and XAI went from $230 billion to $250 billion.
Overnight.
Right. They instantly created $200 billion in value out of thin air without launching a single new product. So how does that math actually work? Like, are these numbers tethered to reality, or are they just engineered to perfectly fit the all-stock exchange ratio they offered to the investors?
What's fascinating here is the total disconnect between these private valuations and actual market traction. The premiums you are looking at there are entirely based on untested ambitions. I mean, let's look at their main rival, OpenAI.
Okay.
OpenAI is projecting $29.4 billion in revenue for 2026. XAI is projecting around $350 million.
Wait, so OpenAI is generating roughly 84 times the revenue.
Exactly, 84 times. And yet, XAI's $250 billion valuation trails OpenAI's estimated $300 billion valuation by a remarkably narrow margin. I mean, the market isn't pricing XAI based on what it currently sells. It is pricing them based on the monumental infrastructure they are promising to build in the future.
And what they're promising to build takes us directly from those financial constraints into some incredibly stubborn physical constraints. Because even if you have the infinite money glitch we just described, you eventually, you run out of copper wire.
You run out of actual physical reality.
Exactly. Based on the strategic white papers in our stack, the AI industry has hit a literal wall here on Earth. The U.S. power grid currently has a 2,100 gigawatt connection queue. That backlog of requested power is actually larger than the existing capacity of the entire American grid.
Which is just a mind-bending statistic.
Right. And if you want to build a new hyperscale data center today, you are waiting up to 5 years just for high-voltage transformers to be delivered.
The terrestrial grid is just completely tapped out. When you try to build a ground-based data center right now, you are capped at maybe 0.1 to 1 gigawatt because of severe grid bottlenecks and, local ecological pushback.
Because communities don't want these massive facilities draining their local resources.
Right. Hyperscalers are allocating hundreds of...
Because there's no night cycle or clouds to block the sun.
Exactly. And just as importantly, they solve the cooling crisis. On Earth, data centers drink millions of gallons of fresh water just to keep the servers from melting down. But in the vacuum of space, the ambient temperature is near absolute zero.
Wow, so free air conditioning, basically.
Right. They can utilize passive cooling, making it an infinite free heat sink, and then the processed data is just beamed around the globe using optical laser links between the satellites, which entirely bypasses traditional fiber optic bottlenecks.
Okay, but let's take a step back here and look at this as an engineering project. Sending 1 million servers into space on rockets. I mean, it sounds brilliant on paper, but part of me wonders if this incredible sci-fi narrative isn't just a highly effective distraction.
A distraction from what?
Well, ChatGPT has roughly 800 million weekly active users right now. Grok, which is XAI's product, has maybe 50 to 64 million monthly users. When you are losing the user war that badly, isn't proposing an orbital supercomputer just a shiny object to keep investors hypnotized?
I mean, while it certainly captures investor imagination, and it is shiny, the physics behind the orbital pivot represent the only viable path to hyperscale independence. Currently, XAI relies really heavily on their terrestrial anchor, the Colossus supercomputer down in Memphis.
Right, the one with the 200,000 NVIDIA H100 GPUs.
Exactly. But they can only scale that Memphis facility so far before the local grid fails them. Google is attempting to escape these constraints by designing proprietary chips to bypass NVIDIA entirely. SpaceX is attempting to escape by achieving absolute energy independence in space. In a heavily power-constrained world, controlling your own limitless power source is the ultimate structural moat.
And energy independence isn't just a corporate advantage, is it? It is a serious matter of national security. When you figure out how to bypass the U.S. power grid entirely, you stop being just a tech startup and you start becoming a pillar of U.S. defense.
You become essential infrastructure.
Right. And looking at the intelligence reports in our stack today, the Pentagon needs that pillar right now. The geopolitical AI race is tighter than anyone anticipated.
The tension in the competitive landscape cannot be overstated. The performance gap between the United States and China is dangerously narrow right now.
Narrower than a lot of people realize.
Yeah, the primary benchmark the industry relies on is the MMLU score. Think of MMLU as the ultimate comprehensive standardized test for AI models. It evaluates everything from advanced mathematics to law and medicine, and it's graded out of 100.
Okay, so where do things stand?
Well, the U.S. is currently leading with OpenAI's GPT-5, sitting at a score of 92.3. But China's DeepSeek R2 is breathing right down their neck with an 89.4.
And that 89.4 is happening despite the severe export controls the U.S. implemented specifically to starve Chinese competitors of high-end hardware, right? Like, we literally banned them from buying the best NVIDIA chips. So how are they keeping up?
They pivoted entirely to software elegance. DeepSeek's CEO, Liang Wenfeng, has been remarkably transparent about this. He stated publicly that capital isn't their bottleneck, hardware is.
So they have the money, just not the chips.
Exactly. So to compensate for the export bans, they achieved extreme algorithmic efficiency. Instead of using brute force with the newest, fastest chips like we do in the US, they rewrote their code to be incredibly lean.
Wow.
Yeah, they are running these massive training runs on downgraded H800 chips. It requires 2 to 4 times more processing time, but they are adapting. Furthermore, their global strategy is to open source these highly efficient models.
So they're just giving them away.
Yes, giving them away to capture the global developer ecosystem before the U.S. can establish true dominance.
Which perfectly illustrates why the U.S. government seems perfectly willing to allow this unprecedented concentration of corporate power in the SpaceX AI merger. I mean, look at the layers of the defense stack they just built here.
It's comprehensive.
It really is. You have SpaceX providing exclusive rapid orbital delivery. You have Starlink acting as a sovereign, unjammable global communications network. You have xAI providing frontier AI processing with that Colossus architecture. And at the foundational layer, you have X.com.
With its massive user base.
Right. 350 to 400 million users acting as a relentless, real-time sociopolitical data feed to train those models on actual human behavior.
It creates a fully autonomous, vertically integrated ecosystem. They own the pipeline, the fuel, and the final product.
And we are seeing the battle for physical AI components, like rare earth metals for chips and servers, heating up in volatile regions like Venezuela and Colombia. If the physical supply chain is moving to contested territory, a fully American end-to-end orbital stack becomes absolutely priceless to the Pentagon, doesn't it?
Oh, absolutely. If we connect this to the bigger picture, this integrated stack is arguably the most robust defense the U.S. currently has against China's open-source strategy. It offers the Department of Defense a closed intelligence network completely independent of traditional, slow-moving terrestrial contractors.
Because they can just do it all in-house.
Right. They already have a framework agreement with the Pentagon worth up to $200 million. By fusing these companies, they've effectively forged an untouchable geopolitical weapon that operates entirely outside the vulnerabilities of the U.S. power grid.
So with the company positioned as an absolute geopolitical necessity, we have to look at the financial endgame here. What do you do when you've built the ultimate defense asset? You take it to the public markets.
Of course.
The internal documents refer to this as Project Apex. SpaceX has lined up a massive syndicate of 21 banks. We're talking Morgan Stanley, Goldman Sachs, JP Morgan Chase, Bank of America, and they confidentially filed their S-1 on April 1st, 2026.
And the numbers are staggering.
Yeah, the goal is to go public in June, raising between $50 and $75 billion at a target valuation exceeding $2 trillion.
Oh, right. And just to contextualize a $2 trillion IPO, consider the previous global record holder. That was Saudi Aramco, which raised $29.4 billion.
So this is on a whole different planet.
Literally and figuratively. Project Apex is asking the public markets to absorb a capital raise 2 to 3 times larger than the biggest IPO in human history. And the sheer gravitational pull of this offering is causing a massive capital migration.
What do you mean by capital migration?
Well, for years, retail and institutional investors parked their money in Tesla stock simply to get indirect exposure to Elon Musk's AI ambitions. That so-called AI Musk premium is now evaporating. Capital is abandoning legacy electric vehicles and moving directly into this new pure-play space and intelligence entity.
It's causing an absolute scramble. I mean, if you are OpenAI or Anthropic, you are suddenly facing a competitor with an infinite war chest. They are panicking, accelerating their own IPO timelines to October 2026 just to maintain capital parity.
It's a gold rush.
Yeah, Goldman Sachs is now forecasting a record-shattering $160 billion IPO year, purely driven by this AI arms race.
So what does this all mean for regulators? When a company gets this big, the antitrust alarms usually start ringing loud and clear.
Naturally.
Historically, when we broke up Standard Oil in 1911, the government physically separated the oil pipelines from the refineries, right? They created 34 different companies. In 1984, they broke up AT&T by drawing geographic lines on a map separating the regional baby bells. But how do you physically divide this?
That's the million-dollar or trillion-dollar question. Right. You have an inseparable web of real-time data from X, the neural networks from XAI, the solar energy harvested by SpaceX in orbit, and the delivery mechanism of Starlink. You can't just draw a line on a map in space.
This raises an important question, and it encapsulates what antitrust scholars currently refer to as the dilemma of dividing the indivisible.
Dividing the indivisible.
Right. The traditional mechanisms for breaking up monopolies rely entirely on physical, geographic, or very clear corporate boundaries. You simply cannot easily disentangle a highly trained neural network from its proprietary data feed, nor can you sever it from the bespoke orbital delivery system it requires to function.
It's all one organism.
Exactly. Legal analysts have largely concluded that structural breakups like chopping the company into smaller pieces are technically unfeasible here. Instead, regulators will be forced to pivot toward behavioral remedies.
Meaning they leave the massive $2 trillion monolith completely intact, but they just put strict rules on how it is allowed to play with others.
Precisely. Rather than smashing the infrastructure, regulators might mandate that competitor AI firms like OpenAI or Anthropic be granted least access to the orbital compute grid at fair market rates. Or they might ban exclusive data contracts to ensure a level playing field. But dismantling the entity itself appears practically impossible.
But, while the armor looks impenetrable from the outside, the environmental studies and internal documents in our stack today reveal some pretty severe structural cracks. We are looking at a massive paradox of progress.
The environmental side of this is very complex.
Let's start there, the stratospheric paradox. The entire pitch to investors for orbital compute is that it is 100% clean solar energy, finally escaping the ecological strain on Earth's rivers and local power grids. But to build that clean orbital utopia, you have to get 1 million servers into space.
Right.
And for that, SpaceX relies on the Starship rocket.
And the environmental footprint of that specific delivery system is severe. According to the impact studies, a single Starship launch produces 76,000 metric tons of CO2 equivalent. However, carbon dioxide isn't actually the primary threat here.
Oh, really? What is it?
The critical issue is the soot, the black carbon generated by the engines.
Right, because unlike airplanes that fly in the lower atmosphere where rain can eventually wash emissions out of the sky, starships inject black carbon directly into the stratosphere. Up there, the soot just sits. Think of it like wearing a black t-shirt on a bright sunny day. It absorbs the solar heat, permanently warming the upper layers of the atmosphere.
Yeah, the data indicates that soot deposited in the stratosphere has a localized warming effect up to 500 times stronger than traditional aviation emissions. If they execute on their master plan to launch 1 million orbital objects, the extrapolated launch tempo projects severe ozone layer disruption before 2030.
It's just a few years away.
Exactly. So the pristine, infinite compute environment they are building in space comes at the direct, immediate cost of Earth's atmospheric integrity.
And as if atmospheric degradation wasn't enough, there is a very human crisis happening inside the corporate walls. The documents show a staggering brain drain. Between mid-2024 and April 2026, 9 of the 11 original XAI co-founders departed.
That's a massive loss of talent.
It is. We are talking about the core architects of Grok, brilliant minds like Zhiheng Dai, Guodong Zhang, Ross Nordin. The hemorrhage of talent got so bad that in March 2026, Musk publicly admitted, quote, "We need to rebuild from scratch."
This represents a critical and honestly often misunderstood vulnerability. The corporate talking point is always that the mission remains unchanged and the intellectual property is securely backed up.
Right, the code is on a hard drive somewhere.
But the reality of frontier AI is that these models are heavily dependent on tacit knowledge. The intuition of how to tweak a neural network or why a specific architecture behaves a certain way that lives primarily in the minds of the creators, not just in code repositories.
So you can't just hand the manual to a new guy.
Exactly. Losing 90% of your founding engineering core is a massive threat to product continuity. They are essentially asking public investors for $2 trillion while simultaneously borrowing engineers from Tesla just to plug the holes in Grok's daily development.
Which transitions us into what analysts are calling the reputational threat matrix. Now, We are reporting directly from the source material here, so if you are listening to this and considering buying into this $2 trillion IPO, you have to look at their S-1 filing.
The S1 is critical reading.
Yeah, the S-1 is the mandatory registration paperwork where a company is legally obligated to confess all of its worst-case scenarios and liabilities to potential investors. And the risks they list here, they're not just standard boilerplate warnings.
Not at all. When you look at the filings, the institutional risks are stark. First, on April 25, 2026, the Department of Justice unsealed Jeffrey Epstein files containing 1,500 mentions of Musk.
Again, just reporting what is in the document.
Exactly. Corporate governance experts immediately demanded this be explicitly listed as a formal key person risk in the S1, warning that leadership instability could tank the stock. Second, there is a coordinated wave of global regulatory probes.
Where are those coming from?
The Irish Data Protection Commission, the EU, the UK, and India are all actively launching investigations into CSAM child sexual abuse material, specifically regarding the guardrails on Grok's image generation tools. The S1 explicitly warns investors that these probes could lead to massive fines or a total loss of market access in key global regions.
And you layer that on top of the ongoing shareholder lawsuits in Nevada, where investors are claiming the leadership engaged in controlling conflicts of interest just to force this merger through. I mean, while the optimistic scenario is a smooth sprint to a $2 trillion evaluation, the nightmare scenario detailed in these very documents is that these compounding investigations spook the bank underwriters.
And if they get spooked, the whole thing shutters.
Right. The IPO gets delayed, the valuation gets slashed, and SpaceX is forced to legally amputate XAI to save its aerospace contracts. But here's where it gets really interesting. When you synthesize this entire mountain of sources, the $1.25 trillion price tag, the 2,100 gigawatt waiting line for electricity, the million servers destined for the stratosphere, and the geopolitical defense contracts, you realize that the nature of technology has fundamentally shifted.
The paradigm has totally changed.
It has. Artificial intelligence is moving out of the realm of nimble software and directly into the realm of heavy industry, rocket fuel, and global superpowers. As the infrastructure consolidates into these untouchable mega-entities, the competition for raw compute vanishes.
And basic economics dictate that when monopolies spend billions on infrastructure, those costs are inevitably passed down to you, the consumer.
Exactly. We are already seeing the end of cheap intelligence, with OpenAI introducing ad-supported free tiers and preparing $200 a month pro tiers. The era of the subsidized tech startup is over. The era of the mega utility has absolutely arrived.
And there's a secondary layer to that realization that leaves us with a profound final thought. It builds on a really interesting question posed in a recent New York Times editorial, which simply asked, Mars or the moon or AI?
It's a fascinating framing.
It is. If SpaceX successfully completes this transition, morphing from a company fundamentally dedicated to making humanity a multiplanetary species into a corporation primarily focused on maintaining an unbreakable Earth-orbiting AI monopoly, what happens to the dream of Mars? Has the relentless, capital-intensive pursuit of artificial intelligence permanently anchored humanity's greatest space pioneer to Earth's immediate orbit?
A $1 trillion question hanging right above our heads. Thank you for joining us on this deep dive. Keep looking up and keep questioning the infrastructure being built in the stars.